Welcome to the deep dive. Today we're getting into the details of Titan Company Ltd.
That's right. We're looking at their latest Q2 and half-year results, the period ending September 30th, 2025.
And our goal here isn't just, reading out numbers.
No, definitely not. We want to unpack how a company like Titan handles things like, well, major gold price swings, potential tax changes.
While also managing a big leadership change and planning some serious global moves.
Exactly. And we're basing this on their official filings and the earnings presentation they put out on November 3rd. Solid sources. Okay, so here's the hook, the puzzle we want to piece together for you. Titan mentioned a, let's say, slow start to the quarter, but then they posted this absolutely massive jump in pre-tax profit. How did they manage that kind of pivot, turning a slow start into such a profitable quarter?
That's the core question, isn't it? It really boils down to strategic execution, particularly around premium products.
Okay, let's get into those headline numbers first. Consolidated total income. And this is important. We're leaving out bullion and digital gold sales here. All right, the more volatile parts.
That income grew by a solid 21.0% compared to Q2 last year. Pretty good. But the profit story, that's where things really pop.
Oh, absolutely. Their profit before tax, PBT, didn't just nudge up. It leaped, an incredible 60.5% jump, hitting 1,522 crores.
Wow.
And think about the margins. That means their PBT margin climbed 228 basis points, landed at 9.3%. That's a serious improvement in underlying profitability.
And management basically spelled out how they did it. They talked about a performance that built momentum through the quarter.
A progressive buildup.
And it really came together during that early festive period in September. Around Navratri, that last push gave them 21% growth just in that window. Changed the whole quarter's story.
Yeah, and that kind of success, that agility, it really sets the stage for the incoming leadership, doesn't it? Because the other huge piece of news from that November 3rd board meeting was the change right at the top.
Right, a major transition.
Yeah, Mr. C.K. Venkataraman, who's the current MD, he's set to retire on December 31st, 2025.
Okay, and stepping in.
Mr. Ajoy Chawla. He's appointed as the new managing director for 5 years, starting January 1st, 2026. Needs shareholder approval, of course, but that's the plan.
And Chawla's background is key here, isn't it? He's not new to Titan.
Not at all. He's been the CEO of their powerhouse division jewelry since October 2019.
The segment that drives most of their profit.
Exactly. And under his leadership, that division apparently saw something like 3 times growth in both sales and profits. It's a huge track record.
So it feels like they're promoting the architect of their biggest success story to lead the entire company.
That's certainly the signal it sends. It suggests the strategies that work so well in jewelry might become the playbook for, well, everything else.
Okay, speaking of jewelry, let's dive deeper into that segment. Consolidated income there was up 20.7%, reaching 14,092 crores.
Strong growth. And just like the overall picture, the operating profit, the EBIT, really surged, up 54.6%.
Which pushed the margin up significantly.
Yeah, from 8.3% last year to a very healthy 10.7% this quarter.
Now, what's really interesting is how they achieved this growth, especially with market headwinds.
Right.
Because they were up against a couple of things.
Yeah.
A high base from last year when there was a customs duty cut, and maybe more significantly, that sharp rise in gold prices during the quarter.
Yeah, usually higher gold prices make buyers hesitate, right? They wait for it to dip. So how did income grow so much if buyer numbers might have been shaky? Well, this is where the strategy comes in. The sources are quite clear. The growth was almost entirely driven by higher average ticket sizes.
So fewer buyers maybe, but each one spending more.
Exactly. They compensated for a slight dip in the actual number of buyers growing. It was about value over volume. They really doubled down on premium items and things that people see as investments.
That makes sense. If gold is expensive, you pitch gold coins or heavier studded pieces as a way to store value, not just as fashion.
Precisely. And the numbers back that up. Gold coins saw substantial growth, around 65% year on year. That screams investment demand. And studded jewelry, those higher margin pieces, they also grew steadily, about 16% year on year. It seems they successfully targeted customers who weren't scared off by high prices, maybe even saw it as a reason to buy.
And this focus wasn't just domestic, right?
Yeah.
The international side saw huge growth too.
Oh, absolutely explosive growth internationally for jewelry. Something like 92% year-on-year growth, hitting 561 cores.
92%. Wow.
Yeah, really strong performance across the UAE and North America particularly.
That kind of international success really feeds into their broader strategy, which we'll get to.
It definitely sets the stage, but first let's touch on the other segments because it's a bit of a mixed bag, and there are some counterintuitive results in there.
Okay, let's start with watches. How did they do?
Watches division saw decent growth, 13.3% in total income, and their margins actually improved a bit, up to 16.1% EBIT margin.
And what drove that growth?
It was mainly the analog watches segment, traditional watches. That part grew about 17% in revenue, and it seems premiumization was the key there too, especially within the main Titan brand.
Okay, so analog is strong. What about smartwatches?
Here's the interesting contrast. While analog thrived, smartwatch volume was actually lower, down about 22% year-on-year.
That's quite a divergence. Analog up, smart down. What do you think that tells us maybe about consumer priorities right now?
Well, it's a great question for you, the listener, to think about. Are people perhaps experiencing some tech fatigue? Or maybe in uncertain times, they prefer the lasting value or, the status of a classic timepiece over the latest gadget, especially higher-end analog watches.
It does suggest Titan's classic higher value offerings are maybe resonating more than the tech side right now.
Okay, now let's shift to eye care. Income growth there was more modest.
Yeah, eye care division total income grew 8.8%, but the real story there was the profit margin. It really took a hit.
How bad was it?
Pretty dramatic. Operating profit, EBIT, dropped by 47.6%, almost halved. Wow, 47% dropped.
Yeah, leaving the margin at just 5.3%. That's down sharply from 11.0% last year.
Okay, there has to be a specific reason for that kind of collapse. What happened?
It's a fascinating signal about market reactions to potential policy changes. The reports state that growth slowed right down in September.
Why?
Because customers were apparently holding off on buying glasses. They deferred purchases because there was talk of a proposed GST rate cut on eyewear, potentially dropping from 12% down to 5%.
The people just waited, hoping to save money if the tax rate dropped later.
Exactly. They decided to wait it out. And that delay, that uncertainty, was enough to basically wipe out almost half their operating profit for the quarter. Just couldn't get people in the door in that final month.
That's incredible. Shows just how sensitive consumers are to even potential policy shifts, especially for discretionary items.
It's a stark reminder, isn't it? Painful but clear.
All right, let's move into section 4. This is where we see Titan's strategy for future growth becoming really clear. Let's start with the diversification, specifically Titan Engineering and Automation Limited Teal.
Right. Teal's performance was, frankly, spectacular. It shows their diversification into industrial automation is really paying off.
How spectacular over time.
Total income shot up 112% year-on-year, reached 415 crores, and the operating profit up 276%.
276%.
Yes, which resulted in a really impressive 22.7% EBIT margin, way up from 12.8% last year.
Now, was that all organic growth, or did acquisitions play a part?
Good point. It was significantly boosted by a smart acquisition.
Mm-hmm.
Back in April 2025, Teal bought a specialized test and assembly automation business from a company called Just Tech Precision Industry India.
Okay, so quick integration, big impact.
Seems like it. A really effective bit of M&A, moving them further into that industrial space, well beyond just consumer goods.
All right, shifting back to consumer diversification. The emerging businesses portfolio, that's Tenera, fragrances, women's bags.
Yeah, that portfolio is also showing important progress. Total income for the group grew 34.0%. And, crucially, the overall losses from that portfolio are shrinking.
Shrinking losses is key for new ventures.
Definitely. Losses reduced from minus 29 crores last year to minus 24 crores this quarter. That improvement was apparently driven by fragrances becoming more profitable and really high growth in women's bags.
Women's bags grew how much?
Almost 90% year-on-year growth for women's bags. Seems like e-commerce and those early festive sales really fueled that. It shows these newer bets are moving towards sustainability.
Freeing up capital and focus for the really big strategic plays.
Like the major move announced for the Middle East. This ties back to that incredible 92% international jewelry growth we talked about.
Right, the Damas acquisition.
Exactly. Titan announced plans to acquire controlling stake 67% initially in Damas jewelry.
Which is a huge name in the GCC region, right?
A very prominent, well-established brand across the Gulf. The deal values the enterprise at AED 1,000 to 38 million, and it'll be Titan's international holding company making the acquisition.
That's a massive statement of intent. It's not just exporting anymore. They're buying significant local presence, market share, brand recognition.
In one of the world's most important markets for high-value jewelry, it really cements their global ambitions. A huge bet on future growth outside India.
Okay, before we wrap this up, let's quickly connect all this financial success and strategy back to the core strength of the Titan brand itself, because that premiumization strategy only works if people trust the brand and value the design.
Absolutely critical. And they continue to get external validation. Titan Eye Plus, for example, picked up 3 bronze lions at the Cannes Lions Festival this year for a campaign.
Impressive.
And on the watch front, the Titan Edge Ultra Slim were shortlisted for the Grand Prix de l'Horlogerie de Genève. That's like the Oscars for watches. It shows their design and quality are recognized globally.
And supporting all this is a huge retail footprint. Over 3,300 stores now.
Yeah, 3,377 stores as of the end of September. Still expanding.
Okay. And one final point on the corporate side, ESG.
Right, just briefly touch on their corporate responsibility goals. They're working towards becoming water positive and achieving net zero carbon for Scope 1 and 2 emissions by FY30.
Important long-term goals.
Crucial for sustainability and risk mitigation as they grow. And socially, they mention things like empowering over 50,000 girls via their Kanya program and having 30% female representation in their workforce, building a sustainable foundation.
Okay, so let's bring it all together. What's the main takeaway for you listening to this? It seems Titan masterfully used that early festive surge and a real focus on premium, higher-value products
Agility was key.
to navigate the volatility in gold prices. They traded some volume for much higher value per sale, protecting their profits.
Yeah, they shielded that core profitability effectively, setting a strong foundation just as Mr. Chawla prepares to take over as MD.
So the company looks financially strong heading into this leadership transition.
Absolutely. But that huge international push, especially buying Damas in the Gulf, that changes the game operationally. Which leads us to a final thought for you to consider.
Okay, what's the provocative question?
Given this major commitment to global expansion, highlighted by the 92% international growth and the Damas deal, how might Titan need to adapt its operational priorities? Think about the potential political risks, the supply chain complexities. How do you manage those when serving a much broader, high-value international market, especially when integrating a large, established regional player like Damas into your historically India-centric operations?
That's a great question. Balancing that rapid global growth with managing potentially new complex risks, that seems like job number one for the new leadership. A powerful thought to leave things on.
Indeed.
That's all for this deep dive. Thanks for joining us. We'll see you next time.